Alrighty, good evening, everyone. Or for me, it's actually good morning. It's about 12:30 in the evening slash morning of Halloween. Welcome to Hurley Investments Financial Services Commentary for Tuesday, the 30th of October, 2018. And I probably shouldn't be doing this late. I'm a little tired. I'm a little frustrated. And I hope to make some brutally honest points to you today to help you understand about making money in the market and maybe how difficult it is. I'm starting off with something I heard on Friday on CNBC. Retiring in a down market can mean 2/3 less money for the rest of your life. This is from the AIG Retirement CEO. This is Jana Greer. And the short answer that she comes down to, and I'm going to read the second paragraph there. Greer cited a study that compared two people retiring just 2 years apart. The first one in a market downturn, the second in an upturn. She said the impact can be huge. Obviously, if someone's taking some money out and we're in a market downturn with the standard asset allocations, hey, we're going to stick some in bonds, we're going to stick some in equities, plain and simple, you're looking at losing 2/3 or having 2/3 less money for you to have available for retirement for the rest of your life. In 2008, we went through something that's called the new normal. And plain and simple, the new normal is the reason that I have created Hurley Investments, because in 2008, the new normal was a higher than average VIX, or volatility in the market. And if you do some research on it, you'll find out that our market volatility since 2008, including 2008, obviously, this runs in that 150% higher than average volatility. And it's going to be some simple commentary, but the plain answer is the new normal is a more volatile market that's based on bigger swooshes to the down and bigger trading ranges or movements within the S&P 500 that's judged by the VIX. For those that don't know, the VIX is the fear index, or in simple terms, the VIX is the possible movement of the S&P 500. If I was to go ahead and grab a VIX chart right here and put that in plain and simple English, the VIX is the possible move of the S&P 500 over the next 30 days. I should probably put that in there. And right now, we're sitting at a 23.35. So mathematically, the VIX can move 23.35% in the next 30 days. The 50-day moving average sits at 15.64. The 200-day sits at 15.88. I can't document the exact year, but I can tell you it was pre-2008. I remember when the VIX is at a 5, you could almost sell everything because you'd go through volatility. And when the VIX is at a 10, you would buy. I was primarily doing this with options, where I would literally buy my options down at a 5 because I know that at a 10, things would start to sell off, and then vice versa. And if I said that wrong, let me try that one more time. At a 5, you knew that the market was going to tank. At a 10, you knew that it was going to probably rebound. And literally, you almost knew every time it hit 10, you could short something. You could short stock and take unlimited risk. I was shorting more calls. But I would short my calls. Well, you know how it is. You sell high, you buy low. Same idea with the options. You buy when the market volatility is low and you sell when it's high. And what I'm trying to tell you here is that a lot has changed since 2008. Our mantra is if you protect your nest egg, your investments, or your savings, the profits will come with Hurley Investments. There's no time frame there. I love it when people talk about this yearly or, hey, I'm looking for a monthly return. Haven't seen it in real life. I'm looking for this average rate of return. Well, let me point something out to you. You know what? I might as well. I just found these guys recently kind of new to me. They're momentum options. They've been around for forever. I want to read their disclosure. Government regulations require disclosure of the fact, and that is not true. There is no government regulations that say you have to disclose anything for education. That while these methods have worked in the past performance does not necessarily indicate of future performance. While there is a differential for profits, there is also a risk of loss. A loss incurred in connection with Momentum Options Trading LLC can be significant. You should therefore carefully consider whether trading is suitable for you in light of your financial circumstance. There's substantial risk in trading. Loss incurred in connection with futures trading can be significant. We make no claim regarding past or present future performance. We merely track every trade and show the performance of all the trades the system user produces. Simulated trading is different than real money. Hypothetical results are not real results. Please contact your broker about the risk of trading stocks, options, or futures. All communication are opinions, not advice. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs in general. I'm going to take this back, such as lack of liquidity, the chance of having an order really being filled, commissions, SEC fees, exercise fees. There's quite a bit in here. Simulated trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representations being made that any account will or likely to achieve profit or losses similar to those shown. Guys, averages are not your friends. I'm going to teach you one more time. If you gain 50%, then lose 50%, you have a 2-year average return on your portfolio of a 0% return. That is not the question you need to ask. An average return is not important. What's important is to understand averages are not growth. But a real return or a portfolio growth is a negative 25%. Or you lost a quarter for every dollar you put in on your 0 average return on your portfolio. I'm bothered because for the first time, and I heard this on CNBC as well, I believe it said for the first time since 1950 or for the past 50 years, but I'm pretty sure they said 1950, the S&P had 2 distinct 10% drops or more in a year. Now, one of those was intraday. It wasn't a closing drop of 10%, but we're definitely more volatile. And the questions I'm having asked about me and about what we're doing, plain and simple, I'm frustrated with the lack of understanding that some people are coming to me with. And for all intents and purposes, I'll be honest with you, this is more for people that are looking for help, people that currently are not happy with their trading, their own personal trading, their stock market trading, their advisor, their education that thought was real trading, whatever it may be. I'm disappointed people are having such a hard time in trying to make a decision when they know what they've done haven't worked. So I'm going to go ahead and I'm going to give you a couple of my keystones to success. And these keystones to success I've used in life, at work, for my business, in church. It's some of the things that I have done through, and I don't know who this is attributed to, but it's just some keystones to success that I think are going to be helpful that also apply to the stock market. But here we go. Number one, belief. It's my opinion, obviously. You have to have a belief in your system. And the short answer I'm going to have to tell you that this belief can't change from day to day. It can't change from month to month. It has to work. It has to weather the downturns. It has to weather the good times. It can't have a glitch. A glitch loses 2/3 of what you had to trade with, 2/3 of what you were saving for retirement, 2/3 of your nest egg. So that belief is a knowledge that you can do something. It's more than just an inner feeling. It's an accomplishment. It's back tested. It's proven in a 2008, a 2000, a Black Monday in 87, a 93 recession. This belief is your power. It's your inner strength. It's your way to continue when things get tough. It's mandatory. Number two, courage. Plain and simple. I think courage in the stock market is a special kind of knowledge to be able to tell someone, and I'm going to quote this, exactly how it is. It's not a cakewalk in the stock market. You need courage to place a trade. You need courage to follow your belief or your system, your methodology. You need courage to tell someone you're an idiot for thinking you can get 20% in a month or 100% in a year, where you're planning on it or counting on it. The market returns are unpredictable. In all honesty, I can minimize the downside movement. I can dollar cost average without adding or requesting more money to be put into the portfolio. I can get better returns over a period of time and double your portfolio quicker than the average 7.75% or 7.5 years because of the way the system works. It doesn't mean it'll be that way for everyone. Some people I have are stuck in Ford. I've got a portion of my portfolio stuck in Ford. But some people have double, triple, or more shares of Ford, so that when it does come back, they could have very easily a 400 to 500% return in their portfolio. But it hasn't happened in the last 6 years for them. Desire. Desire alone is not enough. You need knowledge, you need education. But if you're to lack desire, it means you lack a key element to success. Many talented, many market experts, many education, maybe many advisory people, talented individuals, educated, knowledgeable, have failed because they lack the desire to be able to stick it out in the hard times. Many victories have been snatched by an underdog because they wanted it more. So if you desire intensely, you act upon it, and you can weather the storms and the hard times, everything you desire by way of the market, in my opinion, can be yours, or it's going to be within reach. Desire to weather the storms the market gives you. 4, excellence. I'm going to say this 2 different ways. In my job, you can't be wrong. Because you can't be wrong, I collar trade. I do the best I can to make up some of the downward movement. I spend money on an insurance-like instrument called the long put. I think excellence also goes beyond the call of duty, or doing more than others expect, offering a level of service where I'm willing to talk with you more than once a year, where I send out emails to update, I give weekly commentaries, I give more of myself than you would ever find of a standard broker. It also comes from maintaining the highest standards, paying attention to the smallest detail. It means doing your very best. It doesn't mean being the best, but it means doing your best without losing all your capital. Number 5, failure. Yes, I was successful in 2008, but the key here is successful people in the market are not afraid to fail. And defining failure can be a lot of different things. You have to be willing to accept when you're wrong. You have to be willing to accept that you could have done things differently or better. You have to know when to quit a position, a stock, an equity, a trade. At the same time, you got to understand you only truly fail when you quit. The key is, will the market stay irrational as long as you have the patience or the capital to be in it? Number 6, goals. Oops, wrong thing. I talked about SMART goals way back when. And SMART goals, the acronym, stands for simple, measuring, accountable, repeatable, and time. I will go through this one more in general at the beginning of the year, but goals. You have to have goals that are achievable, goals that are short-term, medium-term, and long-term. You have to have a level of accountability or something as a process to follow along with. If you don't have those goals, you're just out there in the wind. Honesty, by far the hardest part of the stock market. It's amazing how many people double portfolios are doing just fine, have it understood, have it made, and have lost 50% or more of their portfolio. before you in the stock market, you have two paths, an honest path or a dishonest path. An honest path is going to have hills, trials, frustrations, anger, growth, wins. It's going to test your emotions all across the board. You have to be honest with yourself to fight fear and greed. You have to be honest with yourself, and for me, it's with my loved one, to call it how it is. Nothing like selling a house and being down 7% because I'm purely in some option strategies. It's different than an IRA retirement portfolio. This is supposed to be my growth portfolio, and nothing like being down 7% because Bank of America tanks, and well, what else have I been in? Facebook is eating it, but it is up today. Under Armour was a good one, but it's down. Marvel's down. Ford's kind of coming back. I can't remember some of the other ones that I'm in, but the short answer is yes. By putting in the last 3 months, I think I'm down 7%. And I'm frustrated as all get out because all of my, for intents and purposes, all 13 or 17 for the most part of my, let me take that back, 17. So I guess I've had 13 I've had to adjust, or I'm still in the for losses right now. So I've had 4 out of 17 that worked the way I want them to go, and I was out fine. My other 13 I've struggled with. That is honesty. Does my retirement portfolio look a lot better? Collar trading? Of course it does. But there is frustrations built in to being in the stock market. Be honest with yourself. Imagination. And my easiest one that I have here, how many different ways can an option be moved? If you have and I'm going to use my Facebook one, right? If you have a June, let me see if I can't get a pen here. If you have a Facebook June 2020 long call, how many different ways can you move that option or adjust it or change it? And it's funny because most often or not, people will say 3. Hey, you can move it back in time at the same strike price. You can move it out in time at the same strike price. You can leave it where it's at. Well, I said adjust or change. You can roll it in and up in strike price. You can roll it in and down in strike price. You can keep it in the month that it's at and move it up or down. You can move it out in time at the same strike price, out in time and up in the same strike price, down in time. You can short a call against it. You can add a long put. You can exercise your option. You can sell or buy your option back to close it. I could say, if I was just going to tick off imagination, your option can stay where it's at. 1, 2, 3, out in time, up, down, 5, 6, 7. You can sell it. Sometimes you can exercise it. So we have 9, 10, 11. You can add a short call to it, a long put. 13 different ways you can adjust or move your option. Have some imagination. Look outside of the box when you're trading. See all the possibilities. Looking at what can be done gives, in all honesty, gives my friend Jeffrey Dunyan the ability to look at rolling a $5 bull call spread on Amazon out in time of week and down $50 to be able to get out of a trade profitable. Pretty freaking amazing. That's some imagination that needs to be used, where you can rehearse all the possibilities, map out your plans on what you're going to do with your trade, visualize or imagine the worst case scenario so you're prepared for it. Number 9, I'm not going to be foolish to say that you need to be able to look for opportunities. I think a successful person has no, let me take that back. Yeah, I'm going to keep that. Not only a successful trader, but a successful person has no limits to their opportunities. I think a lot of people only see a small portion of what's possible with their lives. And in doing so, I think they miss opportunities because they're not willing to see the possibilities. I think those possibilities take persistence. I think you have to always remember that opportunities are here in front of you every single day. But are you willing to first look for them? 2, do one of the hardest things in the world to change what you're doing to take advantage of them? And 3, can you see the vision to be successful in your opportunities? It's difficult, but opportunities literally are always present if we are willing to take them. And last but not least, persistence. And this is where I'm going to go with today's going to kind of highlight that. Going to stand it out. It's not what I wanted to do. The joy of having fun with word. Persistence. Plain and simple. The power to use your methodology. Hold on to that methodology. In spite of everything. Now, could this be your demise? Of course it is. And I'm going to look at this more as athletics, but it definitely relates to the stock market. Persistence is the power to hold on in spite of everything, the power to endure. This is the winner's quality. Persistence is the ability to face defeat again and again without giving up, to push on in the face of great difficulty, knowing that victory can be yours. Persistence means taking pains to overcome every obstacle and do what's necessary to reach your goals. I have chosen the stock market. I'm an idiot. I chose to start this in 2006. Plain simple, I was able to weather a 2008 profitably, and I see a way to beat the average expectations, returns, and pains of typical big box asset allocation models currently used for the masses. Everyday people. And I've got average expectations. So that's what I wanted to push out to you tonight. If you were to ask me what's happening this week and why, pretty unique, and it really comes down to good news is bad news and bad news is good news. Just look at the pathetic, poor earnings on Facebook. Get Zuckerberg out, get some adults in there to run the company. He's done amazing with his experiment to bring the world together. Of course, he did it for money. He didn't do it out of the goodness of his heart. If you want to see your business keep going, get an adult to manage the business. Good news is bad news. Bad news is good news. We need to miss a couple numbers. We need to give reasons for the Fed to slow the rate of interest rate hikes, which all really comes down to weaken the dollar for continued growth. We've had some really good earnings. We've had some fabulous earnings, and some stocks have shown it, some stocks have not. As I look through last week, FCX hasn't shown their so-so earnings. Ford showed how great their earnings was. Mosaic hasn't showed how good their earnings was. Visa's gone down on fabulous earnings. We've got Under Armour shot off today. Baidu, pretty darn good earnings. Looks like it's going to be down. Facebook, pretty mixed earnings. Looks like it's going to be up. Earnings alone are not enough to save the market right now. It really comes down to, one more time, fundamentals will beat technicals over time, and sentiment trumps all. A fundamentally sound company will beat the technical indicators over time. It'll go up when it's supposed to go down because fundamentally it's cheap. It's got a low valuation. It's a deal. It's a bargain. It's hit a profit point or a level of cheapness that makes it attractive. But sentiment beats everything. If people are afraid and the end of the world is here, our markets are going to go down. If you ask me where our markets are going to end this week, 1, 2, could be a triple bottom on the Dow that's bearish. 1, 2, seem to be heading up lower, higher lows. If I was literally just to take the RSI and draw a trend line, I see higher lows, but 3 times to touch, maybe a triple bottom on the RSI chart for the bearish S&P 500. Slightly positive for the year now. The NASDAQ, same thing. it would be foolish for me to guess where we're going to be at the end of this week. I really don't have a sense of a direction. Are we going to sell off in an already horrific month of October? Are we going to buy into new positions for window dressing? I don't know. I just know that we're going to end our week. Not only that, but it's daylight savings on the weekend. If you ask me, we're going to end October, pretty much where we are. I'd say we're going to be down 8% when I thought we'd be up 1.5%. I actually thought this month would probably happen last month, and I was off. I was off by 30 days. Earnings, second busiest earnings season coming up. Today we had GE, MasterCard, Coke, EA Sports, Under Armour, which knocked out of the park, Baidu, still to be decided, Facebook, which is doing good. Tomorrow we have Clorox, which did really well today, a safety trade. General Motors, Taps, that's Molson Coors, Soda, Sprint, Yum, CF, Fitbit. Thursday, Dominion, Noble, CBS, Floor is going to be a good one. GoPro, probably not doing good. Pandora's had a good bounce back. X is US Steel, Shake Shack. I do pay attention to Remax to see how some real estate agents are doing on the lack of liquidity and the slowing down of the home sales. Wynn and Apple on Thursday. Obviously, Apple's the big one. Friday, Alibaba, and then the oil stocks, CVX and ExxonMobil, CVX, Chevron. So interesting full week again of earnings. But again, I don't think earnings are going to save us. It's going to come down to our economic reports, which I haven't updated. So Tuesday we had consumer confidence, which actually came in higher, came in at 137.9 versus the expected 135.8. We have MBA home sales, and tomorrow we're going to have the ADP employment numbers. Again, I'm going to tell you, bad is good. If we're lower than the 180 expected, we will probably see our markets rise into the close of the October month. Thursday, busy day on Thursday. We have obviously initial continuing claims, productivity, unit labor costs, the ISM index. Good news is going to be bad news there. Construction spending, which wasn't any good last time around. We have auto and truck sales. And most importantly, what we have for this week is going to be the average work week numbers. Got to be able to spell, Hurley. Again, I'm a little bit tired. Average work week numbers. The biggest one will be that non-farm payroll, right? If we miss here, might give a reason to slow down the December or make some dovish remarks in the December FOMC meeting. Private payrolls, wouldn't hurt to see those come down.